Hey everybody, this is Stacking Cash. Today we're going to be taking a look at a new report on Chinese electric vehicles by Fitch Ratings. In this report, we're going to be spending time on the Chinese EV industry, and we're going to be seeing if they should be scared of upcoming competition. If you're new to the channel, I would like to welcome you and feel free to subscribe. If you're not new to the channel and you're a regular, welcome back. I'm glad you're here again. Fitch is a credit rating firm, and they are saying that the leading Chinese electric vehicle startups NIO, XPeng Motors, and Li Auto are thriving on their products and ecosystems, but they have warned about the intense competition they may face next. In a report released on this Tuesday, Fitch said China's startup EV leaders have established themselves in a booming market where branding, product, value for money, and after-sales service are playing a bigger role, yet fiercer competition will require significant investments to retain competitiveness. Fitch detailed the EV industry in China with the respective products and features of NIO, XPeng, and Li Auto in the 12-page report, which appears to be the agency's first coverage of these three companies. Fitch expects strong growth in passenger EVs in China to continue at a 28% CAGR over the period between 2021 and 2025 and to exceed 35% share by 2025. Key beneficiaries of the strong growth include the three publicly traded EV startups NIO, XPeng, and Li Auto, which survived the industry downturn in 2019 and have emerged as market leaders, particularly in the smart EV segment, the report said. In 2021, Chinese startup brands have a 15% market share of all EVs sold, with these three brands contributing 57%, the report noted. Fitch expects the three EV leaders to maintain a strong growth as China's EV market becomes less policy-driven and less dependent on government subsidies, towards one that is more competitive, with brand, product, value for money, and after-sales service playing a greater role. However, they could face stiff competition from new EV products by existing Chinese automakers, global automakers, and new entrants backed by domestic tech giants such as Baidu, Xiaomi, and Huawei, the report said. Leading Chinese EV startups aim to differentiate their brands through a high degree of vehicle intelligence, premium user service, and an integrated ecosystem covering production, sales, energy, replenishment, and other after-sales services. But this requires intensive research and development, as well as sales and marketing expenses, requiring a significant upfront investment and pressure on profitability, Fitch noted. The financial profiles of the three publicly traded EV leaders are constrained by weak, albeit improving profitability, although this is mitigated by an abundant liquidity following equity fundraising in 2020 and 2021, Fitch said. Fitch expects their business profiles to remain weak in the near term, with small size, short track record, limited diversification, and high execution risk. It is important to note that Fitch is a debt rating agency, and the current debt size of NIO, XPeng, and Li Auto is not high. These startups are not heavy borrowers, and their interest-bearing debt is primarily bank loans for plant construction, Fitch noted. It's only normal that we're seeing more and more reports on these Chinese players now that they're becoming regular names in the stock market. There is definitely going to be heavy competition in China, not only for these startups, but from BYD, Tesla, and the legacy automakers such as BMW, Audi, Mercedes, Ford, GM, and so on. The good thing about China is that the market is huge, and there's plenty of space for everyone who is gonna be producing an EV. The entire country plans to be carbon neutral by 2060, so this is the future and everyone is gonna be having to adapt to it. While the legacy automakers are confused on how to transition to EVs, these three companies are having a nice start, and they're gonna be already in front compared to the legacy auto. What do you think about these three companies? Do you think that they're gonna be successful in their future? Or are they too small and won't be able to scale production compared to, let's say, Tesla or the legacy auto? If you are interested for more EV news, you can check out my playlist. Here you'll be able to find videos about all of my latest EV news. Either way, thank you for hanging around until the end of this video, and I'll be wishing you a wonderful day.